Did you know that the global ETF market has skyrocketed to over $7.7 trillion? Yeah, that's trillion with a T. ETFs, or exchange-traded funds, aren't just for Wall Street pros anymore. They're opening doors for everyone. Here's the deal. ETFs are like a basket of stocks or bonds, but you can trade them like a single stock. It's all about diversification with convenience. Now, why should you care? Simple. They can supercharge your investment strategy with lower fees, incredible accessibility, and a chance at impressive returns. But here's where it gets juicy. Making money with ETFs starts with understanding how they tick. You've got to get familiar with their core structure. Think of them as a sampler platter, where each morsel represents a slice of the market. It'll save you from putting all your eggs in one highly fragile basket. And let's face it, the simplicity of buying an entire index like the S&P 500 in one go is a compelling proposition. Stick around as we delve into practical strategies to harness their power for your financial growth. To really make the most of ETFs, you've got to leverage their flexibility. Let's talk about it. Whether you're aiming for growth, income, or both, there's an ETF for that. Want to explore sectors like technology or healthcare without committing to individual stocks? ETFs have got you covered. They're like having a financial Swiss Army knife ready for anything the market throws your way. Now, if you're eyeing dividends, some ETFs focus specifically on dividend-paying stocks, handing you a passive income stream. It's like having a consistent paycheck without the 9 to 5. But remember, even these carry risk. So keep an eye on the payout history and expense ratios before diving in. Considering market volatility? ETFs offer a strategic edge. You can hedge your bets naturally, moving towards bond ETFs for stability, or even venture into the world of commodity ETFs, like gold when markets get turbulent. But hold up, there's a rule of thumb. Always consider the expense ratio. That's the annual fee you pay to the manager of an ETF. While most ETFs boast low fees compared to mutual funds, ensure you're not eroding your potential gains with sneaky high charges. Essentially, knowledge is power, and by understanding these nuances, you're not just participating in the market, you're playing it like a pro. Let's shift our focus to some strategic moves for maximizing returns with ETFs. You've heard it before. Timing the market is tough, but with dollar cost averaging, it's like playing the long game, and it's brilliant. This strategy allows you to invest a fixed amount regularly, buying more shares when prices are low and fewer when they're high, smoothing out the bumps over time. Curious about market performance without the stress of constant monitoring? ETFs tracking indexes are a fantastic way to mirror the market without breaking a sweat. Think of it as aligning yourself with market growth organically. Companies like Vanguard and BlackRock offer ETFs that cover broad indexes, allowing you to spread your risk and increase exposure in one move. But here's another tip. Diversify globally. US markets may be the juggernaut, but emerging markets can offer high growth potential. International ETFs are an excellent way to access opportunities in economies that might experience significant growth in the coming years. Lastly, keep an eye on liquidity. You want ETFs that trade frequently to ensure you can buy or sell swiftly without impacting the price. So, there you have it. Tools, strategies, and insights to turn the expansive ETF market into your personal playground. Remember, success won't come overnight, but with each wise decision, you're building a robust financial future. Now, let's explore the potential pitfalls to keep your ETF strategy rock solid. While ETFs are versatile and appealing, they're not entirely risk-free. A common misconception is that diversification means zero risk, but market downturns can still impact ETF value because they follow overall trends. Also, be wary of leveraged ETFs. These aim to double or triple the daily return of an index. Sounds enticing, right? But they reset daily, potentially leading to unexpected losses during volatile markets if held too long. These are best for short-term moves, not long-term holds, so handle with care. Another aspect, tracking errors. Occasionally, an ETF might not perfectly mirror its index due to management fees or trade costs. While usually minor, it's worth a look. You want to ensure your choice stays true to its aim, maintaining performance as closely as possible. And let's not overlook taxation. ETFs are tax efficient, but capital gains taxes can still catch you off guard. Understanding the underlying assets and their taxation rules can shield you from surprises come tax season. In the world of investments, informed decisions are key. Stay aware and proactive. By keeping these factors in check, ETFs can offer a resilient addition to your portfolio, combining growth, income potential, and a dash of excitement. Your financial journey just got a little more riveting. For those of you with an appetite for more active engagement, consider embracing thematic ETFs. These are tailored around certain trends or ideas like renewable energy or cybersecurity. They present a chance to tap into innovative sectors you believe have a solid future trajectory. Just remember, the risk can be higher, as these themes might face fluctuating fortunes over time. Another avenue is ESG ETFs, which focus on companies with strong environmental, social, and governance practices. Not only do they allow you to invest with purpose, potentially aligning profits with your personal values, but they're also gaining favor among investors seeking sustainable choices. Plus, with increased corporate focus on sustainability, ESG considerations often influence a company's long-term success. If you're still on the fence, simulated trading platforms offer a risk-free way to dip your toes in the water. Practice your strategies without risking your capital, gaining confidence and honing your approach before making actual investments. Finally, stay plugged into market news and ETF trends. Subscribe to newsletters, follow expert analysts, join forums. Keeping informed can often anticipate market shifts. The ETF market is dynamic, evolving as it reacts to global events and technological advancements. Whether you seek growth, income, or innovation, there's a realm of possibilities. All it takes is curiosity, a bit of research, and you're set to potentially thrive in the exciting ETF ecosystem. In wrapping up, remember that the ETF market offers a world of opportunities. From diversification to strategic thematic investing, ETFs pave a versatile path for anyone seeking to enhance their financial portfolio. Staying informed, discerning risk, and tailoring strategies to your personal goals are your keys to success here. Here's your next step. Explore the world of ETFs yourself. Open up a brokerage account if you haven't yet, and start investigating which ETFs align with your financial goals. Begin with small, calculated investments and grow your knowledge alongside your portfolio. If you found this guide valuable, hit that subscribe button for more insights. Your financial journey awaits. Make it count.